Welcome back. When it comes to buying gold, the average person doesn't really know how to get started. There are a number of gold bullion coins in circulation in the world. The attraction of these is that they retain near full bullion value regardless of either change of government or being transported outside their country of issue. So the starting point will be to know which gold coins are sold in your country. The major bullion coins are, for example, in Australia it's the nugget, in Canada it's the maple, New Zealand the kiwi, South Africa the Krugerrand, the UK it's the Britannia or the sovereign, and in the United States it's the eagle. For simplicity's sake, let's look at the country in which you're living. For the moment, forget about buying coins from other countries. Let's just concentrate on what will be the easiest way for you to start your collection. If you know someone who routinely buys gold and silver and has a reputable dealer, that would be your starting place. If not, I'd strongly suggest that you start researching the dealers in your area and do some comparison shopping. Find out how long they've been in business. Find out if they've ever gone bankrupt, if they've ever had any lawsuits against them, if they follow through on what they say. Find out how much of a premium they charge you for purchasing your gold. Most gold dealers charge you a premium up front when you buy the gold, but do not charge you at the other end when you sell it back to them. But since things have a way of changing rapidly, you should still question whether or not you're being charged at the other end too. The other ways of buying gold, for example, you can buy gold mining shares. These are very risky, as the quantity of a mine's reserves is never accurately known. There can be unforeseen engineering problems in extracting the ore. These can increase production costs and thus eat into the mine's profitability. And the mine can be played out, and there's no more gold there. They're traded on the stock market and can just as easily disappear off the boards, and you can lose all your money. Now let's take a look at e-gold, which is buying gold over the internet. There are various companies who offer online purchasing and selling of gold bullion. What are the advantages and disadvantages of this method of investing in gold? Well, the advantages are that you can buy very small quantities of gold at a relatively economic price. You don't even have to buy in ounces. You can purchase grams of gold, which at the time of writing this is just $35 a gram. You can buy and sell your gold 24/7, and you're not limited to store opening hours of the bullion dealers. The premiums charged for purchasing the gold are much lower than bullion dealers or mints. Typically, you'll pay between 2 or 3% of the purchase price. You can either allow them to keep your gold in their depository or, depending where you live in the world, you can take delivery of your gold. These companies are currently based in the Northern Hemisphere, and they'll not deliver gold to the Southern Hemisphere at the moment. You don't have to spend your gold grams. You can sit on them, or you can sell them in return for straight cash. The disadvantages of an e-gold account is that there's a degree of intermediation in the holding. Your gold is the legal property of trustees who have a fiduciary duty to you. This means that it's not quite the same as outright ownership of the gold in your hot little hand. There could be security issues in that a hacker may get into your account and may make an unauthorized payment, similar to the risks of doing internet banking. There are other ways. There are gold futures, gold-backed shares, ETFs. Well, these are exchange-traded funds which are too risky for the average investor. Jewelry is another way. It is a profitable business for those who buy at wholesale and sell at retail, but it's a poor way of investing in gold. The advantages of jewelry are the enjoyment of wearing it, and it's very easy to buy. The disadvantages are that the acquisition costs are high. Retail jewelry is often marked up by 300% or more in the shops. The real value of jewelry is in the gemstones, the design and the craftsmanship, and these greatly outrank the value of the gold. All pieces are different and their values are subjective. If you don't have experience, you probably won't know a fair value, and it's easily stolen. So to summarise, the major bullion coins for the various countries: Australia the nugget, Canada the maple, New Zealand the kiwi, South Africa the Krugerrand, the UK the Britannia or sovereign, and the US the eagle. The ways of buying gold: you can go to bullion dealers and mints, you can buy gold mining shares, you can buy gold shares, ETFs, exchange-traded funds, you can buy e-gold and jewellery. In conclusion, make sure that whoever you buy your gold from is a dealer or a business that has been in operation for a long time, that they have a good reputation and they're not fly-by-nights. Today we've covered the ABCs of gold. Next time we're going to take a closer look at some of the deeper issues surrounding gold, and one of these issues is knowing when to buy gold and when to sell it. Bye for now.